Dear viewers, welcome to this episode of Expert Speaks. After a long time, I am coming back to you with the taxation related topic all over again. The expert of the week is our popular faculty member, Mr. C.A. Sriram. Of late, there are lots of notices which are going to NRIs for not filing the tax returns or asking for some clarity around the transactions that they have done in India. Why it is happening? I'll be asking this question and trying to get an answer from the expert of the week. Stay till the end of the video. There are very fine points in this which every NRI must know. This is NRI Money Clinic for you, and I am Dr. Chandrakant, but your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the taxation related issues for the NRI community, I have requested my ACE faculty member, Chartered Accountant, Mr. Sriram Rao, to address the tax queries that could be there in your mind. Mr. Sriram Rao is a very popular person on this channel. He has done countless videos trying to simplify the tax codes which are applicable to NRIs in India. He is a practitioner of direct taxes partner at Nitin J. Shetty & Co. He has to his credit solving the many intricate tax queries pertaining to NRI community. Welcome to this episode, Mr. Sriram Rao.
Thank you.
Sriram, a lot of NRIs are getting notices and I am flooded with a lot of query in my inbox. I have a question for you. When should NRIs file tax returns? I know there is an elaborate answer behind it. To the extent possible, please simplify and tell when should NRIs file the tax return?
Any individual for that matter, whether NRI or otherwise, is required to file tax returns in India primarily when his taxable income in India exceeds maximum amount which is not chargeable to tax. That is basic exemption limit, which was earlier up to last year it was 2.5 lakhs. And from this financial year 23-24 onwards, it will be 3 lakh rupees. That is a primary condition. However, in specific, if I have to say, in respect of non-resident, then apart from this basic exemption slab, exceeding that, there are certain other conditions which are as follows. Say, for example, if the total income of that particular individual includes any income which is chargeable to tax at special rate, like say capital gains which are chargeable to tax at 10%, or 15% or 20% flat rate, or say dividend taxable at 20% flat rate in the hands of these non-residents, or if the non-resident is taking double taxation avoidance agreement benefit and bringing into tax certain incomes at a lesser rate. These are incomes which are chargeable to tax at a special rate. So for this, even 1 rupee income would trigger the tax liability in India. Okay, that's where they would become mandatorily required to file the taxes. If they have such an income, even, a small amount of income in that respect. Apart from that, if a non-resident is claiming benefit of section 54, 54EC or 54F, that is, if they have a long-term capital gain and they invest in some other investment so as to claim the exemption under long-term capital gain or deduction under long-term capital gain. At that time, even after claiming deduction, if the income becomes zero, then also they are required to file the return of income mandatorily. Apart from that, there are certain other conditions which are not linked to determination of income or per se activities. Okay. So what I would like to say is these are about 6 points which are very important to be understood and remembered by any person. For example, a person who is depositing rupees 1 crore in his current account or an amount of rupees 50 lakhs or more in his savings bank account would be required to file return of income irrespective of whatever income, whether he earns an income in India or not. Similarly, if he has an expenditure of 2 lakh rupees or more on foreign travel, or if an individual is having an expenditure of electricity consumption up to rupees 1 lakh per annum, okay, or if the total turnover or gross receipts from a business exceeds rupees 60 lakh in a year, or gross receipts from profession exceeds 10 lakhs in a year, or aggregate of TDS TDS exceeds rupees 25,000 in a year. All these people, this is a general provision applicable to all residents and non-residents, but for non-residents, they have to take care of this because they are not normally would not be aware of these provisions in India. So apart from the monetary income limits, These are also certain other factors, circumstances under which they would be mandatorily required to file the tax returns in India.
Mr. Sriram, while you have simplified all these things for the benefit of the NRI community, there are circumstances where they will get into a gray area or confusing. There are a lot of people who file tax return on their own. For example, now let's say somebody has these equity shares and he sells it and it's a small amount. How does the filing of tax return work out or the obligations around filing of tax returns work out in such circumstances?
Yeah, this is a, very interesting question to ask, and also very interesting to learn about this also for everyone for that matter. Say, for example, from sale of listed equity shares, which is a long-term capital asset that's held for more than a year, there would be no taxes on the first 1 lakh rupee of income on that. Over and above that, it is chargeable tax at 10% flat rate. So, if a person is having only that income and which is less than 1 lakh rupee, that time he is not liable for payment of any taxes in India. That means his maximum amount which is not chargeable tax from that income perspective is rupees 1 lakh, which if that has not been exceeded, then he is not liable to pay taxes in India. So thereby actually he is not required to file return of income in India. There is no mandatory for him to file return of income. However, if the income exceeds even by 1,000 rupees in that nature of income, then on that 1,000, 10% tax on 100 rupees will come. So at that time, he would mandatorily required to file taxes in India. This 1 lakh limit is applicable only in respect of this particular nature of income, that is long-term capital gain from sale of equity shares, which are chargeable to tax at a very specific rate of 10%. But this kind of threshold is not applicable for any other type of incomes which are chargeable to tax at special rates. Say, for example, a dividend or long-term capital gain from immovable property. For that, there is no 1 lakh threshold. Even one small income of say 50 rupees or 100 rupees, they would be required to file return of income from that perspective.
Mr. Sriram, you laid down several conditions under which a person is required to file tax returns, whether it's an NRI or a resident India. One of the things you mentioned is, if there is a deposit of 50 lakh or more into an SB account, then he is obligated to file the tax return. I just need one clarification here. When you say deposited 50 lakhs into the SB account, does it include NRO account, number one? Number two, what you are referring is the cash deposits or the receipts into the bank, the SB or NRO account?
Number one, the mention in the act is only savings bank account. That would mean that all types of saving bank account, resident account, NRO account, everything would be included in that. Okay. And number two, the word used in the act is only deposit. That does not mean that only cash deposit. Whatever type of deposit, maybe by transfer from one account to another, NEFT, RTGS, UPI payments, or say, for example, I have deposited a check which is received somebody else, say investment maturity proceeds which are being received to my bank account, everything put together, if it is aggregating to rupees 50 lakh or more, mean to say all the credits in the bank account is exceeding 50 lakh or more in a financial year, then it mandates a particular person to file his tax returns in India.
One offshoot of this problem is that, see, now you spoke about the SB account deposits. What about the NRI account? The interest from NRI account is tax-free. So should people consider the deposits which are going into NRI account also? See, every NRI has substantial amounts of money coming into NRI account at one point or the other. So how does the law treat the NRI accounts for this deposit of money into the bank accounts?
See, it's a very gray area as on date. There is no clarity as such, and no clarity has been provided by the board, CMDT also, till date. However, in my experience and what has been happening around in respect of maintenance of these bank accounts, and wherein lot of people have been violating the norms which are prescribed under FEMA, my intention or my instinct says that the government's intention is to, yes. I mean, what I mean by yes is, yes, they would also, a person who is depositing rupees 50 lakh or more into NRI account, he would also be required to file his tax returns in India. Okay. Because what has been happening is, even though those people who are not eligible to maintain NRI account, like who have become already a resident, they are also continuing to maintain NRI account. So that being the case, the government wants to know the truth behind that, whether they are actually eligible to maintain NRI account. If not, if they are getting deposit into NRI account, that may be liable for taxes in India. So from that angle, to go to that depth of that fact, I think in my view, the intention of the government is to make such NRIs who are depositing 50 lakh or more into NRI account, even though that is not chargeable tax, they would be required to file taxes. It is better for them to file taxes in India. This would be my advice at this point of time, at least, till the clarity comes from the government of India.
See, during your introductory remark, you also mentioned that if somebody has a TDS TCS which exceeds 25,000 rupees per annum, he is obligated to file the tax return. Many NRIs don't even know that they have gone through a TDS or TCS because people are busy in their life. They have maintained NRI FDs there. They would have done some transaction. They would have just signed the papers. They come to India in a hurry, finish up some other dealing, and just go back. So can you tell me a little bit more about this TCS, TDS related issues? How will an NRI come to know how much has been done? Is there a simple way they can check it and stay on the right side of the law?
Yes, definitely. It's actually, see, it is simple that, almost many of the transactions now which are happening in India, they would be either liable for TCS or TDS. For example, a non-resident might not have been earning any income in India, but he comes and purchases a car in India worth rupees 25 lakh or more. At that time, 1% TCS, if any car is purchased above 10 lakh, there will be 1% TCS. So if that is exceeding 25 lakh, automatically 25,000 or more than that TCS would have been already collected. Okay, similarly, on the interest of say 75,000, at the rate of 30% TDS would have been deducted by the banks. So even though the threshold is not exceeded, it is mandatory for that such person to file tax return. So to understand, to verify how much of TDS has been done, it is very easy actually for that particular individual. Say after the end of the financial year at least, okay, that is after 31st of March 2024 or any 31st of March, you just log into your IT portal. Point number 1, verify your AIS statement, account information statement, okay, annual information statement, AIS. Second, you verify your Form 26AS. Okay, it's very easy. Once you log into your portal, there will be links to go to this particular section. Just click on that, select the particular financial year, assessment year. You will get the entire list of details. Okay, and normally for the entire year, the TDS and TCS details would have got updated by 15th of May. Okay, if you log in prior to that, maybe third quarter's interest or third quarter or second quarter's details would have been updated. But after 15th of May, normally full year's information would be available in AIS and 26AS. It's very easy for anybody to come to know about this. It is better they keep on checking all that and make sure that they are on the right side of the law.
Mr. Sriram, I heard you, and I have interviewed other chartered accountants. I have tried to solve the problems of people who get notices and other things. In my personal opinion, what I personally feel is for NRIs, everyone, even if you don't have an income, it probably makes sense for you to file a nil tax return statement. See, if you are capable of filing the tax returns on your own, you know how to log into your account, see these 26AS or AS statement, that's fine. But for most people, they can't do this. So it makes sense, if you're an NRI, to have a relationship with one of the chartered accountants from wherever you come from and file a nil tax return. That will solve a lot of problems. Reason is, one, you are proving that you are filing as an NRI, you are proving your tax return. Then because while filing the tax returns, you will check the AS statement, which makes sure that you are not neglected something that year and you are the recipient of a notice at a later point of time. The usual tendency of the tax authorities to send notices to those people who don't file the tax return than sending notices to those people who have filed the tax return. It's probably a less compliance-related issue if every NRI files a tax return every year, and it becomes much, much easier. Do you subscribe to my views, or you have a differing opinion on this?
If a non-resident is having their some sort of transactions with India, okay, or in India, whatever sort of transaction it may be, in my opinion, it is always better for them to file their taxes in India. They are not all, having any sort of connection in India, whether in, or financial transaction in India, then it's at least, fine. They do not file taxes. But if they have some sort of connection in India, if they are having some bank accounts, having some transactions, it is always advisable for them to file the tax returns. At least you are making, at least from your side, some effort to bring it to the notice of the government. What is your position is for a particular year? What are you? Whether resident, non-resident, whatever it is. So I would agree with that. From the perspective of receiving notices, I do not 100% agree with that. But at least to the extent of those who are making an effort, there is always, some positive intent from the government, and receipt of notice by a filer, filer of tax return is much lesser than receipt of notice by a non-filer of tax return. That much I can say.
Now, coming back to the question, there are people who will not file tax. Maybe out of negligence, maybe out of ignorance, it just didn't strike them. They have not filed the tax return. What consequences will follow if they do not file the tax return?
For non-filing of tax returns, interestingly, as on date, there is no direct penal provisions. Earlier, there was one penal provision which was levying a penalty of 5,000 rupees. But as on date, there is no direct penal provision that has been struck down. What they have done is they have mandatorily started collecting late fee for filing tax returns. Okay. And in an extreme circumstances where there is a evasion of taxes and willful evasion of taxes rather, I would say, there is a provision under the Income Tax Act to initiate a criminal prosecution proceeding for not filing the income tax returns and evading the taxes thereon. So there is no penal provisions, but there are this kind of prosecution provisions for willful evaders for filing the tax returns and paying taxes.
So it is best to keep these things at bay by filing the tax return. If you have nothing to file, better file a nil tax return and be done with it.
Correct.
Mr. Sriram, my audience throws a lot of questions at me at regular intervals of time. Somebody writes to me and say that I have received a notice because they have maintained an NRI, because I have got a mutual fund thing. How does it happen? What could be the reason behind those people receiving notices for maintaining the FDs?
See, the reason is, point number one, there is mismatch in the information. See, let us bifurcate into two sides now. Notice is received by a filer of tax return and notice is received by a non-filer of tax. If a person has filed his tax return, as a non-resident, but his investment shows a considerable big chunk of amount and there is a mismatch. Mismatch in respect of the income what he has shown in his tax returns in India and the amount of investment that he has done. So at that time, a notice would get generated in the system asking to clarify the source of investment in these funds. The investment can be in fixed deposits, mutual funds, equity shares, or immovable properties, whatever it can. Similar to that, a non-filer, there is no question of mismatch in that regard, because they have not filed a return of income at all, because government is not aware of what is his position is. So for a non-filer, even the NRI account, say for example, a non-filer, but he is a resident, but he is maintaining NRI account, he has opened the NRI FDs further. So government want to know what is the source of fund, whether it is liable for tax in India, etc., etc. For that purpose, they issue notices. So you are not complied with the provisions of filing the tax returns at the beginning. That is one part of it. But when the notice is received by you, it is always better for you to make a proper compliance in this regard by reverting them with all the explanations and information and proper documentary evidence to prove your position. For example, you might have to prove first that I am a non-resident. You will have to provide number of days stay. You have to provide your copy of the passport, full set of copy of the passport. Say you are in employment outside of India, get a employment certificate and provide it to them. So you also provide a copy of your visa, which are, maybe a resident visa that you are having for the, time being where you are staying in that particular country. So provide all that. Satisfy your residential status that you are a non-resident for that particular period for which they are asking for information. Then say that this income, this particular bank account, what you are referring to, that I have made an investment. That is the NRI fund. And to that deposit have gone from my foreign sources. Okay. If you are able to prove that, then automatically there will not be further questions being asked. Similarly, you made an investment in mutual funds or shares or whatever it is. That is true. Say you are also declared that you are a non-resident to that mutual fund house, or say to the broker. Okay. And you opened a PS Demat account for that information. So at that time, you can always say that account is linked to NRI account, or the investment for that mutual fund or something has gone from your NRI account, and to the NRI account, the money has been received from outside of India. That being the case, I am a non-resident. That's why the entire funds which are earned outside of India has come to India as an investment. Source is explained, but the source cannot be taxed. That is why I am not liable for payment of taxes. That's why I have not filed the return of income. Such an explanation with documentary evidences and linking of the transaction, all that has to be established properly to the tax authorities. Whether you file the tax returns or not file the tax returns, under both facts and circumstances, you will have to do all this exercise.
One thing NRIs have to keep in mind is the financial hygiene or tax hygiene or whatever it is. Let's say that somebody receives a note whatsoever. Authorities should also have a limitation to what extent I can question, how many years before transaction I can question, which documents is a must-have, or which document, if it is beyond this particular year, you can forget it. You have an advice for the NRI community with respect to this and what law says, and as a part of maintaining clean records, what is the message that you have for the community?
See, under the normal fact and circumstances, the authorities have the power to reopen the proceedings and assess the income of a particular individual. For that purpose, they can go back up to 3 years backwards. That means 3 years from the date of assessment year. Okay. So from the end of the assessment year, 3 years, if it has lapsed, then to the year back to that, they cannot go any further. For example, now we are in the initial stage of 2024. We are in the month of February, March, etc. So at this point of time, up to 31st of March 2024, the assessing officer has a normal time limit of going backwards to up to assessment year 2020-2021. That means for the financial year 1920, that is the year end 31st of March 2020, till that the assessing officer can go back and ask you various information and documents, etc. Okay, this is a normal provision. However, under certain fact and circumstances, say for example, if the income what has escaped the taxes, if that is exceeding rupees 50 lakh, and under certain fact and circumstances, there are certain other conditions also to be fulfilled. If those conditions are fulfilled, then they can go back up to 10 years. This time limit will go back up to 10 years, and they can reopen the assessment for those years also. At any point of time, this is the time limit for reopening, not for closure of the assessment. Okay. If any point of time assessment has been opened legally within the time limit, then it can be continued till the time limit to be expired for passing of the order, or till the date of passing of the order. So there are certain time limits, again 9 months or more than that also, 21 months also available under certain fact and circumstances. If they play it properly, the officers, while issuing certain notices. So till that time, they can continue and inquire you on questioning. One need not be bothered much if they are clean. They need to just collate all the information possible and provide that to the officer and satisfy him that there is no evasion of taxes, as there is no taxable income, etc. And they can get a clean order in that regard.
Sriram, thank you very much for these inputs. But I personally feel the NRI community should not be worried about this 3 years limit, 10 years limits, or whatever it is. It's better if you keep a record of all your transactions, irrespective of number of years you have spent outside of India. Reason being, there are other places where you are required to prove your transactions. For example, insurance is one segment. Every NRI buys policies in India, and you could be paying from your NRI account. The insurance companies will not maintain a record of whether you paid from your NRI account or NRO account. when the policy maturities happen, which could be 10, 15, 20, 30 years later. And if you happen to stay outside of India, you need this money to be repatriated. At that point of time, the insurance company will ask you for the proof of having made payments from your NRI. So it's absolutely a good idea that you maintain your bank transaction proof every year. Take a printout of it and keep it in your mail folder or in a safe place where you have to maintain it. Don't keep it in the physical form. It's better you keep it in an electronic form. If you go back to the bank would have archived the data. It may become very difficult for the banks to retrieve this data and give it to you. So every year, whichever the bank transactions you have, at the end of the year, collect your annual statement. Likewise, if you have remitted money from outside of India through a money exchange or through any other legal thing, keep a copy of that and keep as a proof. Likewise, from your employer, you can ask for a salary certificate every year and maintain it in your fold. A small action that you take today will help you solve many of the tricky tax situations which might pan out in your life in years ahead. With these few words of advice on the hygiene points that I would like to make for the benefit of the NRI community, I'll conclude here. Thank you very much for your time, expertise, and your ever willingness to help the NRI community whenever they have a tax query. Thank you very much for your time, CSC. Thank you very much.
Thank you.
Dear viewers, hope the video that I've done today helped you to understand when should you file your tax return, what might happen if you do not file your tax return, hygienic measures that you need to take to keep the taxman well informed of your financial dealings. If it did help you to understand all these finer points, do not forget to give me a thumbs up. If you are a person who is watching this channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another expert, yet another topic next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.